Hello everyone, welcome to our Business Education and Research channel. In today's video, we will present an in-depth exploration of the determinants of net asset value (NAV) fluctuations of mutual funds. Today we will break down the critical factors that determine NAV and how they influence your investments. By understanding these elements, you can better navigate the complexities of mutual fund investments and optimize your portfolio's performance. Stay tuned. Market value of securities. Underlying asset performance. The performance of securities like stocks and bonds within a mutual fund's portfolio is a primary driver of its NAV. When these securities appreciate in value due to favorable market conditions or strong company performance, the overall asset value of the mutual fund increases, thereby boosting its NAV. Market dynamics. Various market dynamics, including economic indicators, geopolitical stability, and market sentiment, can influence the prices of securities. These fluctuations directly impact the mutual fund's asset valuation and consequently its NAV. For example, consider a mutual fund that invests in technology stocks. If the tech sector sees robust growth due to innovative product launches and strong earnings reports, the value of the fund's holdings in this sector will likely increase, thereby raising its NAV. Cash flows, investor contributions and redemptions. NAV is affected by the flow of money into and out of fund. When investors buy more units of the fund, their money is converted into fund's assets, which increases the NAV. Conversely, when units are redeemed, assets are sold to pay the investors, which can lower the NAV. Dividend and interest receipts. Dividends from stocks and interest from bonds contribute directly to the fund's assets. Higher dividend and interest receipts can significantly enhance the NAV as these earnings are reinvested into fund. For example, if a mutual fund receives a significant inflow of investments during a bullish market and simultaneously earns higher dividends from its equity holdings, both factors combined will elevate the fund's NAV. Mutual fund expenses. Management fees. Every mutual fund incurs management fees, which are periodically deducted from the fund's assets. These fees cover the cost of investment management and administration, thereby reducing the fund's total assets and its NAV. Operational cost. Other operational expenses, including legal fees, auditor fees, and marketing expenses, are also deducted from the fund's assets. High operational cost can lead to a noticeable decrease in NAV. For example, suppose a fund charges 1% annual management fee on its assets base. This fee will be deducted from its total assets, thereby decreasing the NAV. For instance, on an asset base of 1 billion, a 1% fee would reduce NAV by 10 million annually. Asset allocation. Diversification strategies. The way a fund distributes its investments among various assets classes, stocks, bonds, and real estate, etc., affect its risk and return profile, which in turn impacts the NAV. A well-diversified portfolio can mitigate risk and stabilize returns. Rebalancing frequency. The frequency with which fund rebalances its portfolio to align with target allocations affect the NAV. Effective rebalancing ensures that the portfolio does not drift too far from its risk-return profile due to market movements. For example, a mutual fund that initially heavily favored bonds might rebalance by investing more in stocks amid falling interest rates to capitalize on higher returns from the equity market, potentially enhancing its NAV. External economic factors. Interest rate changes. Changes in interest rates affect the valuation of bonds and other fixed income assets in a fund's portfolio. Rising interest rates typically decrease bonds prices, thus reducing the NAV, while falling rates increases bond prices and NAV. Inflation trends. High inflations can diminish the real returns of funds assets, especially if the assets do not provide an inflation hedge, thereby affecting the fund's NAV negatively. For example, in an environment where interest rates increases from 4% to 6%, bond prices might drop, leading to a decrease in NAV of a bond-heavily mutual fund. Conversely, if rates were to decrease, the same fund's NAV might rise. Investor sentiment. Market confidence. Positive investor sentiments often leads to a higher market investments and an increase in funds NAV. Conversely, negative sentiment can prompt redemptions and lower NAV. News and events. Global and local news such as political events, economic data releases, and corporate earnings can influence investor behavior and affect the NAV. For example, following optimistic news about potential economic stimulus, investor confidence may surge, leading to increased fund investments and a subsequent rise in NAV. Currency fluctuations. International investments. For the funds that invest in international market, fluctuations in the exchange rates can significantly impact the valuation of these investments when converted back to the local currency, thereby affecting the fund's NAV. Economic stability. The economic stability of countries where the fund invests can influence currency strength or weaknesses, thus impacting the returns on these investments and the overall NAV. For example, a fund investing in European markets might benefit from a strengthening euro against Indian rupees. If the euro appreciates, the value of European investments increases in rupees terms, boosting the fund's NAV. Legal and regulatory changes. Compliance cost. New legal and regulatory requirements can increase the compliance cost for funds, which are usually passed on to investors by reducing the NAV. Taxation policies. Changes in taxation such as adjustments to capital gain tax or dividend tax can affect the after-tax return for funds and impact on the NAV. For example, suppose a new regulations mandate an increase in the minimum capital gain tax from 10% to 15%, this change would decrease the after-tax returns on the fund's investments, potentially lowering the NAV. Performance of fund manager. Management expertise. The skill and experience of the fund manager in selecting and timing investments play a crucial role in achieving superior returns, thus positively affecting the NAV. Strategic decisions. Strategic decisions related to asset selection, timing of entries and exit, and risk assessment directly impact the performance of the fund and its NAV. For example, an adept fund manager who timely capitalized on a burgeoning market trend by reallocating assets towards high growth sectors may lead to significant fund gains, thus elevating the NAV. In this video, we have covered the essential determinants of NAV in mutual funds, from market dynamics and cash flows to management decisions and external economic factors. Understanding these elements will help you in making more informed investment decisions. Thank you for watching, and don't forget to like, subscribe and click the bell icon for more insightful investment tips.